Alright guys, we are going to do a quick little market update for you guys. So I'm going to simply cover Bitcoin, Ethereum, and the overall altcoin market. We're going to do those three in that order. You're going to see a timestamp down below. And we're going to do this every day. Now, there are going to be some changes. If you guys want me to talk about a specific token, drop that in the comments. What I think I'll start doing is I'll do little look-ins into tokens just to get some more experience with it, and I'll do that with short form content. So for example, if one of you comments, I'd like to see a video on Aerodrome, I'll do a in-depth update or analysis, a quick one in the form of like a YouTube short, post it that way instead of making a complete full video on it. Therefore, we can talk overall market. And in terms of trading content, for those of you who are interested in that, if you're looking to see what I look for when I'm using technical analysis, trying to understand that, we're going to be doing stuff with that soon in an organized manner. I don't really want to mix that in with the YouTube side of things as of now. I'll figure something out for that. But as of now, these videos are going to keep you guys updated on the market. I'm going to hope to, as I'm getting settled back in, consistently post every single day these market updates where we cover the price changes, we cover the news that's going to come out. We're going to dive more into macroeconomics. So I hope you guys are here to grow with me because I have a lot more to learn. Without further ado, let's jump into it by first, again, looking at Bitcoin through a technical analysis perspective. So if you guys remember, I talked a lot about demand zones, and I'm going to make this really quick for you guys. So demand zones are essentially when this scenario happens, when we have a big jump in price followed by a little bit of consolidation followed by another jump in price. The demand zone in this scenario would be this consolidation here. Now you might look at this identified demand zone here and be like, well, I don't see that. We don't see the jump consolidation. That's because it is on the lower time frame. So I believe this was on the 1 hour time frame, where I drew this out. You can see we had a big jump followed by consolidation, followed by another big jump. You could almost say this was a demand zone as well. Nonetheless, we had this demand zone, and look at what happened. Now, demand zone, from what I've learned it, is an area where there is a decent level of buying interest, and you guys can actually see that we come down and tap into this demand zone before going up and hitting a new all-time high. A demand zone drawn in July got tapped into in early August, and you can see we came back and tapped the demand zone yet again, and you could have got, if you were trading this, $112,000 to $117,000 around there. You could have taken some nice TPs there. And then when this move happened and we filled more than 50% of the demand zone, as you can see, the entire thing got filled here. The demand zone's invalidated. So technically I should delete this because we completely filled it up, but I wanted this just to show you guys exactly how these work through my technical analysis perspective. So obviously that definitely did have an impact on what happened with the markets. And then as you can see, we have this other demand zone. This one is on the day time frame. So basically the higher the time frame you go, so if you're going from the 1 hour to the daily time frame, the daily time frame is going to have more solid confluences as you're using a stronger data set than it would be with those short-term price actions that's consistently changing. So that's why we look at these higher time frames to look at overall market structure, where things are going, etc. And as you can see, this is clearly a jump followed by consolidation, followed by another quick jump up, identifying that, in my opinion, as a demand zone, which we have not yet tapped into. Now, a theory that I've learned, this is what I've learned about demand zones, is that price will eventually come back and fill a demand zone. In this case, we are then waiting for a $98,000 Bitcoin to at least tap the top of the demand zone, indicating that in the short period of time that we have, these next couple of months, or this could happen in the next couple of years, eventually we will come down and tap this again per the theory of these demand zones, if that makes sense. So regarding that, that's a little bit on demand zones. If you guys know the general structure of markets in terms of where this is a bullish structure where we have a period of higher highs, higher lows, higher highs, higher lows. Essentially, the next high is higher than the previous one. The next low is higher than the previous one. The same thing is said with that of a bearish structure. So as you can see, we were creating higher highs, higher lows, but then once you come down, formulate a lower high and lower lows. This is a market structure shift where you start to be in a bearish market structure where we currently are sitting. Why? Because we had a low, a high, a lower high, or a lower low than this previous one, a lower high, and if this turns out to be a low, this would be another lower low, indicating that the market structure is still bearish. Now, does this mean that the entire market is going to continue down this way? No, we've always seen market structure shifts. You could almost say this was one where we had this high followed by a lower high, lower low, etc. Weak attempt at a reclaim, continuation down. So in general, you're just simply waiting to see what price action does. You guys can use a lot of different things, confluences such as order blocks. You can use vector candles. There's really a bunch of different things, EMAs. So as you can see, we close below. I don't honestly know what EMA this is, but I believe this is the longer time frame EMA. So if we were to close below this 103,000, then that would indicate even stronger bearish presence in terms of sellers are stepping in. But those are kind of the little things that I look for. I'm still looking to refine how I look at the charts. But overall, Bitcoin has been performing well. We've just recently hit our new all-time high around 12 days ago. So cooling off from this moment really does not concern me in any way, shape, or form. I won't be giving a macroeconomic outlook yet. I want to learn more about that before I give you guys tidbits on it. I know that the Fed, in terms of Jerome Powell, discussed potential rate cuts, which definitely caused a reaction within the market. I forget when that was. But nonetheless, I think we are in for pretty big things in terms of these next couple of months into late Q4 if we continue at this pace. However, if we for somehow come down, tap this demand zone, however, come down and blow past it, then there is potential we go revisit some lower levels. That, of course, would not be great for us short term. Now we're going to move into Ethereum. Again, this was just my coverage on Bitcoin. So Ethereum, as you can see, using the same demand zone principles that I have identified, we have one right here, right? A sharp move up, consolidation, followed by another sharp move up. And this is all the way down around $1,800 per Ethereum. So again, with these demand zones, I'm theorizing that we will eventually come down and tap into this level again. This could be in a bear market, this could be whenever, but eventually there is a theory that this will be tapped again simply off of technical analysis. We also see another demand zone here, which has yet to be tapped in also. This is around the $3,000 level. And then we finally have one that was tapped into but was not filled all the way. I don't know if this was on the 4-hour time frame or on the 1-hour time frame. Like I said, the lower time frames you're looking at, the less strong they will be. I'm trying to figure out what had happened here that I would consider this demand zone. But anyways, we drew a demand zone out here. It did get tapped into, and you would have caught the all-time high of Ethereum had you longed at this level. And again, I'll show you guys how to play demand zones, although that will be something that I need to figure out how I'm going to present that to you guys. So obviously we came up, faced resistance at around that 5K level. If you guys remember when ETH almost hit 4K around this level, we discussed that if we were able to close above, then we would continue, of course, forward, and we were able to do that. Now, this is where we're going to transition slowly into the altcoins. So before we do that, people look at this right here and they call this a double top. You could have said the same thing here, right? Looks like a double top, but it wasn't. Looks like a double top, but it might not be. So I think we still, like I said, I personally think that we still have a lot of room to go in terms of macroeconomics, in terms of other factors within Q4 of 2025. But we're going to have to watch how it all plays out. So in terms of just the technical analysis standpoint, we technically have not flipped bearish. Okay, we technically have not flipped bearish. This is a previous low. We're still above that previous low, right? We just formulated a new all-time high in a very long time. So us cooling off and getting at least some sort of rejection is expected. Personally, I think it's expected. I think it's a possibility that we come down and potentially even retest this previous demand zone. So we're going to have to see how this all plays out, but I think that's a genuine possibility. But I want to talk about the main point of this video. So we're going to transition into altcoins now. What have altcoins been doing? I'm going to use a little bit of examples of different altcoins because not all of them are performing the same as others. But we're going to holistically look at some of them, especially some of the key players, and identify what the problem is, because in my opinion there is a problem that I'd like to discuss. Let's look at Doge. Don't mind all of this. This is from a trading method that I also use that is pretty good, but again I'll have to make a different video on that as well. So I want to go over my concerns with that of altcoins currently, and that is just a comparison to December. If we first look at Ethereum in December, we hit around $4,000 before coming down all the way to around $1,500 per token. So $4,000 per token to $1,500 to where we're now at almost 5K per token is definitely a significant jump. So obviously you can see we are a decent bit higher than we were in November and December of last year. Now, if I take a look at a coin like Aerodrome though, we're currently sitting around $1.30, whereas in December we were at $2.30 is where we hit that new high. That is concerning. What is concerning about it is the fact that Ethereum is leading the market right now and altcoins are barely following suit. Aerodrome is $1 less than it was in December when ETH was $500 less than it currently is. To me, that is concerning because when ETH starts performing well, altcoins should also start performing well. That is just the thesis that we've had throughout the entirety of this market. So to see that not happen, you know, of course, coins are doing well. Like Aerodrome, had you bought at around 30 cents, you'd be up a pretty decent amount at around a 4x, but it's nothing compared to what we saw in December. Same thing with that of Ski Mask Dog. However, this is a lower cap meme coin. This got listed on TradingView in terms of being able to view it at around 33 cents around its all-time high. It's now at around 5 cents. But this is a lower cap kind of niche example. But let's take a look at Doge. Doge is at around 22 cents, whereas in December, Doge went all the way up to 46 cents. And by the way, guys, while we're looking at this, I would consider this little area a demand zone. Maybe if we go on the 4 hour, I want to look at this real quick. Yeah. So I would consider this demand zone, and you guys will see something interesting where this is just looking at this right now. I just caught this. So I consider this a demand zone. We came down into this demand zone around halfway. You would have caught a nice move up from at around 20 cents to 28 cents. So that's a 40% gain simply playing a demand zone. So that's another example where we're just looking at a token. But back to the concern. The concern is that these well-known, very well-respected coins like that of Dogecoin aren't doing anywhere near as good as they were in December. XRP is, of course, an exception. Now, what's interesting is I believe Litecoin. Litecoin hit around 146. It almost got up to that level, but it's still below. And this is considered a high cap altcoin. And you can just go on and on. Another one that did really well last year and is still expected to do well, assuming altcoins do see a run, is that of Render. Render in December hit around $12 per token and is now sitting around $3.60. So you guys can clearly see the consensus that I'm building is that ETH is doing better than it did in December, while alts are doing worse than they were in December. Now, when we had ETH performing poorly yesterday, alts I saw reacted way stronger than they did when, of course, ETH has been pumping. So they're responding to ETH's selling volume, but they're not responding too heavily to ETH's buying volume. That is concerning to me in terms of the altcoin market. It's showing that if we were to just completely fall down with ETH, all these altcoins would probably just get slaughtered from just what I'm looking at. However, like I brought up, if we take the classic Altseason market flow, and if you guys see, this is the classic viewpoint. How we have money flowing into Bitcoin, then it flows into Ethereum, then large caps and Altseason. We've seen something similar to that. We saw Bitcoin in December, of course, hitting its new all-time high, passing 100K. It's, of course, hitting new all-time highs. It hit a new all-time high recently, but we've seen Ethereum outperform Bitcoin. So you could theorize that large caps are next. Now we've seen XRP doing very well, but that's, in my opinion, an off example. If we see other large caps start to perform very well, for example, Dogecoin starts getting money flowing into it in a pretty high extent, and then we see money flow into altcoins, indicating that we are finally getting that alt season, this is a possibility. Or the possibility is Ethereum and Bitcoin have a little bit of juice left. Once they died off and start to descend back into a bear market, all these altcoins are just going to die as well. And in terms of die, could be short term, could be long term. So that is something that, those are two scenarios that I see. And if we are in this scenario where we're in that path to alt season, then I would consider us being in phase 2, because ETH is outperforming Bitcoin. The only thing that's next is that we see money flow into large caps, and then altcoins can be discussed from there. Or again, we just kind of have this stagnation with these altcoins. Ethereum finally gets to its peak, Bitcoin gets to its peak, then we hit a bear market. So those are two scenarios. So not financial advice whatsoever, but what would I do in this situation if I was an investor looking to get into crypto? I would just simply not over leverage myself. So I would not overexpose myself in the markets any way, shape, or form. If I had 10K to invest and I did not want to lose all 10K, I would divvy it up in a little different ways. At 1,500 per ETH, that would have been, of course, a very optimal place to buy Ethereum. But we're in a situation where if you see this scenario playing out, which it definitely could, then you could essentially take any dips of any coins that you find personal conviction in and load up on some of them. I'm thinking of what I would do. So that's what I would do. I would load up on any dips that come my way. I would DCA into a altcoin that I see potentially doing well if we hit this phase. But I would also consider the fact that that phase might not come. So I would probably invest less than I was initially planning to, because I'm considering both scenarios. Instead of going and throwing, I have 10K to invest, I'm going to throw all 10K into altcoins. I don't think that's smart, personally. I think if you want to go at this in a logical way, you got to remove the emotions of hyping, oh, this is going to 100% guaranteed to happen. Like, there's a definite chance that this could. I'm not saying there's not. But when you place all your hope in that, it's not going to take you anywhere at all, because if that doesn't happen and you're betting everything on that, then you're going to be very devastated financially, emotionally, everything. So take this at a logical manner. Consider there's two scenarios that could happen. There's a lot more other scenarios, but for me, those are the two big ones I see, and then approach it that way. That's what I would do. So that's a market overview for you guys. In terms of news for this week, if we go look at Forex Factory, and take a look at Tuesday. Not really much for USD. That's really what I'll look for. Thursday, we'll have unemployment claims, of course, coming out. Looks like we are projected to be at 231,000. Previously, we were at 235,000, so seeing a decrease in unemployment claims would, of course, be nice. Prelim GDP quarter over quarter, 3.1% forecasted with 3% previous. And then we have core PCE price index month over month, and that's really it. So not too much to look at for this week. Well, obviously, you guys saw Powell speak, and markets react very, very favorably to that, so you could have got a nice long in there, but really not much else for the Forex Factory news. So how I'm going to approach these daily market updates, we're really just going to discuss aspects of the market, news that's happening, and again, I'll do that short form content for you guys. And potentially I'll go over the trades that I made. We can even do that no, we won't do that today. I'll incorporate that because I think that will, of course, make it a little more interesting, where I'll actually in-depth discuss the trades I made, the strategy I use. We'll figure it out. But without further ado, I hope you guys enjoy the video, and I'll see you guys later.